Welcome back, friends, to Trading 360. I'm Nicole Petalides. The sun is shining here in New York City. I wore a sunny dress. Just feeling great for the spring ahead of the Easter holiday and Passover. I hope you all don't forget tomorrow, markets close. So this is our last trading day. It's time for the big three, right? 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades, Mike Shorr, Director of Trading Education at Prospera Trading Academy. Thank you both for being with us. So Mike, you're bringing us the cloud as your first take here, looking at Arista Networks. Tell me, are you feeling a little bullish here?
Yeah, you know, it's kind of hard to make a bullish story recently, but I mean, I continue to love the cloud. I really thought that I might have missed Arista yesterday, but definitely loving the price action, and we're getting a little bit of pullback since the markets are down at the SPY, testing that 50 again. So I think it's a great play. It got through support, it got through resistance, holding support here at the 100-day moving average. So if you're looking for a bullish story in an otherwise sideways, even bearish market, I think this is a great play.
Okay, so he found something bullish. He thinks this is a great play. Ben, take a look at the chart. Tell us your thoughts on Arista Networks.
Well, good morning, guys. When I look at ticker symbol ANET, I see a stock that's kind of in the middle of a range that it's been stuck in basically since the beginning of the year. We've got a well-defined upper and lower extreme, and it's at a pivotal point. I think, again, if we were to start to break down, could potentially open up a door for the retest of the lower extreme, which is down around 108. But at this level, it's holding key support. We oftentimes talk about the middle of the range that's been established. In this instance, look at right around where we found support, around that 127.50 level, again, which coincides with the middle of the range that we've been in. And I'm looking at 108, the lower extreme that we saw in the end of February, and the 148.57 highs we saw back at the end of December. Now, I want to point out here, while there's not a lot of directional conviction one way or the other in terms of this 60-minute time frame, it is important that they held the middle of the range. We always talk about that. But I do want to take a look at the daily, because this is where things clear up some. You can see a well-defined range, or trend, I should say, to the upside. You can see the highs and lows that we just looked at from the 60-minute time frame coincide with this value area that I've numbered here as 3. You can see, again, migration of value to the upside. The bulls are hoping for a 4th area to form at a higher level at this point. If we could get a breakout up and through 149. Take a look at the weekly time frame. Here you can see how what a shift in terms of, we talk about that vertical phase where we get the high conviction type tendencies, higher highs and higher lows. You saw that in weekly time frame throughout the month of October here, for the most part, with the breakout up and through this $95 level. But then look at how, well, once we found the stopping price, we kind of start to go sideways, a lot more overlapping, rotational. I just want to point out the 2 phases of development again. So the bulls are in a bit of a horizontal phase right now in a market that's been trending higher, holding a key area of support in the middle of this range, looking for a breakout up and through 148, 149. But guys, not only a breakout, a new area of value to form at a higher level. Those breakouts, oftentimes we see they fail. They just provide a new extreme, but time spent above. And again, a similar pattern such as this. Here's the breakout that we saw out of that $90 range that formed the spring and summer of last year. This is what the bulls are looking for. Should we take out 148 again? High conviction, higher highs, higher lows, participation, energy, and follow-through.
Yeah, you know, can we do that? When we talk about the breakout that Ben is talking about here, Mike, you know, can it do that? Can it continue? Can it hold and continue to move in a bullish pattern? Tell us about your trade.
Yeah, so I'm looking at, we have earnings coming up in early May, so I'm looking at the April 29th, 134, 136 call spread. We should be able to get that for about 60 cents right now. So that's the play. Not going to play it through earnings or anything like that. You know, and seeing, this is a big competitor with Oracle. And if you look at Oracle stock, you can almost see the Oracle dollars coming out and going into Arista. So, you know, we're seeing them getting big contracts from Microsoft, Amazon. And so, you know, is this the Oracle that everybody has been looking for and kind of scratching their heads with Oracle? And so, you know, if we get even a slightly friendly market, I think that this one definitely outperforms.
Yeah, and do you feel like, Mike, that could happen with a lot of the other names that are sort of related in tech? Maybe some of these names are oversold. I mean, you're talking about working with Microsoft and Amazon. I mean, the whole group of them have really sold off. When you look at the NASDAQ, for example, I mean, you could see that it's down 5.5% just this month alone.
Yeah, it's definitely tough. That's why you want to be selective, and you want that fundamental picture to go along with it. This isn't just like, well, all stocks are going up, so let's just figure out one that we want to buy. I mean, you have to be definitely more selective, with everything right now, because we're in a volatile market. So, just tread lightly. That's basically what the whole market is. It's really hard to get any sort of conviction.
Yeah, without a doubt. Let's move on to the next one in the world of REITs, and taking a look here at PEAK is the ticker symbol. And when we see it here, we can see Health Peak Holdings. And tell me a little bit about your thoughts on this one, Mike.
Yeah, so this is a bullish play as well, but it's a bullish play in a more of a defensive area, kind of in two ways. One, it's real estate, and the other one, it's healthcare real estate. So that that demand doesn't go away just because the economy or the stock market's not doing very well. I heard you talking about mortgages and everything like that. This is a company that owns these properties, so you don't have to worry about the financing or anything with that. And so this is, again, I'm waiting for the market to do the hard work for me. I mean, if you look, I'm sure Ben will be going over this soon, at this resistance that's put there. If it gets through there, then, all those stories are going to align, and I think it's a great shot to the upside in an otherwise defensive play.
Right, and when you talk about healthcare and you talk about REITs, those are generally a little more defensive anyway. Ben, your thoughts on the technicals?
Well, let's start with the daily time frame on PEAK, because the 60-minute, very similar pattern in terms of what we just looked at as far as ANET, and you can see again a similar situation here even in the daily, a mid-range trade right now. The upper extreme pretty well defined. We're going back to the we're going back to a year, so beginning of spring of last year, basically $37.69 down to $30.16. Now, what we're looking at here, I think, is a little bit different in terms of what we were just talking about as far as ANET and how it had pulled back and was able to hold key support. Look at what's happening with PEAK, as it recently broke out but failed to get anything going to the downside. Now has worked its way back through the middle of this range that had been forming. So up and through 35.50, we get, if we get some energy and follow through, we could see a retest to the 37 level. So again, we talk about the significance of the upper and the lower extremes, but I think the middle of these ranges should be watched as well, because there's information to be gathered there also in terms of the ability to follow through after, in this case, it would be a failed attempt to break out lower. Let's take a look here at what's been going on in terms of the daily time frame relative to some of the key watched moving averages. And you're going to see actually a little bit of strength again after that failed attempt to break out in a market that had been trending higher. So also, as I'm noticing that this held key support down around this $30 level, so the price decay was somewhat limited relative to the trend that we had seen to the upside in some of the areas that were established on the way up, most recently looking at that range that was established the end of 2020 and the beginning of 2021, again around the $30 level. That held. But look here again, back above the 200-day moving average, this purple line, back up above the 50-day moving average. Now RSI is pulling back a little bit here. That'll be something to watch here in the coming days here. But I also wanted to just point out in terms of the weekly time frame, because look, we were just talking about how we're in the middle of the range that's been established over the last year on the daily time frame. But look, going all the way back to, we'll talk about the lows that we saw in the fall of 2008 up to the highs that we saw up around 56 in the spring of 2013, smack dab in the middle here right now. So again, a situation where if we could work our way up and through some of this key resistance right now, not only on the daily time frame, but also on the weekly, the bigger picture, we could actually see some momentum to the upside. The bulls here have managed to hold some key levels of support. It looks like now it's up to them to do the heavy lifting, which is a similar pattern in terms of what we talked about in terms of a lot of these stocks at these current levels.
And I'm glad you brought the RSI in. So when you see that pulling back a little bit, I know one indicator doesn't make the trade, but when you put them all together, Mike, the way Ben did, tell me a little bit on your final thoughts on PEAK here.
Yeah, definitely. If you're waiting for all the stars to align, you're probably going to be right more often than you're wrong. You're going to make very few trades. So, there's a lot of inputs that have to go into this, but and that's why I'm kind of in that same mode of letting the market do the harder work for us, not just saying, well, I'm going to buy this now and let's hope it gets through resistance. Let's just wait, and then, we'll be waiting at the finish line for them.
All right. Okay. And last but not least, Pinduoduo. I think the Chinese-related stocks have been very exciting. Tell me about your thoughts on this one, because we've had China now really trying hard to, be a little more transparent. They've put out some commentary that gave a boost to some of these names. Tell us more.
Yeah, it did. And I just continue to fade these things. What they say and what they do are usually two completely different things. And until we get some actual follow through from that, then, maybe it's not just an outright short in these Chinese stocks, but I will try and fade the upside, in doing it more on a passive credit type of play off of resistance levels in this case. We're seeing that this is an e-commerce stock, so we're seeing a lot of issues, not so much with the revenue, but the costs underlying it. You saw what Amazon has been doing with their third-party people, adding more to the shipping costs and things like that. It's tough for them to keep their prices the way that they are with their outlying things, and that's just going to increase. And China their numbers have not been great, and that's the numbers they're admitting to, and so that makes me even more skeptical. Usually they try and paint a rosier picture than what is actually happening. This time they're actually telling you, hey, maybe things aren't that great. So I'm just going to continue to fade the upside in these Chinese.
He's just going to go for it. Ben, your thoughts?
Well, I can understand the mindset behind that position on this one. PDD, I mentioned a similar situation as the other two stocks we've taken a look at. On the 60-minute time frame, well-defined upper, well-defined lower extreme, and another instance where we're kind of in the middle of the range. But you can see this is a kind of the mirror image of what we just looked at as far as when we talked about peak and how we were holding above key areas right now, potentially to open up a door for the retest of the upper extreme. Look at what's going on with PDD. We're holding below the middle of that range that we're in right now, 71 down to 23. So I kind of see this as a 50 to 55 sort of mid zone, and we did test the upper extreme of that. We're talking last month towards the end of the month, but failed to hold that upper level. It was reaction to earnings, and they just really weren't able to, again, do that heavy lifting. So here you can see how we've rolled over at a key area of resistance. Let's take a look at where things stand in terms of the daily time frame, because I want to point out here that while we're trying to get through the middle of range on the more intraday, you can see how that coincides with the 50-day. So they're running into some resistance also. This is in a market that's trending lower. So we talk about how continuation more likely than change, and the trend being your friend. Those rallies, in theory, would be short-lived, kind of feeding into what Mike was just talking about in terms of actions are based more on what you do rather than what you say, and the market really feels that way. You can see this. They've been coming under pressure. Again, the selling that we just looked at, we're talking from that upper level here, since breaking down below the 50s, just part of the move lower we've seen since the highs that we saw up around 212. Lastly, I wanted to just take a look at the daily or the weekly time frame, and just here again, it really speaks to the well-defined trend of the downside. We have a couple areas of migration of value that have been playing out here, and looks like if lower this week, 4 in a row, as we've been kind of hovering around or in this range. So not a lot in terms of price decay as of recent, but struggling still to get anything going to the upside. And again, a trend environment to the downside. Look how we're right back to pre-pandemic levels. And again, it's been coming under pressure. You can understand why when you take a look at some of the fundamentals that Mike laid out.
And and as we digest all of that, Mike, do you like a lot of these names that are related to China, or is Pinduoduo really standing out? Because we have so many others that you could trade any day of the week.
Yeah, just the technicals lined up well, and how those resistance levels at that 50-day moving average has been respected. So I'd like this to rally a little bit more so I can sell it for a higher price. And just playing off of that with well-defined, I'm looking at this, a call spread where I'm collecting 75 cents and laying $1.25, so I'm laying 1.67 to 1 on something like that. I'm not a big one of just selling upside or downside premium and then trying to collect nickels in front of a bulldozer.
Great to see you both. Thank you so much, Mike and Ben. We appreciate it. Mike Shorr of Prosper Trading Academy and Ben Lichtenstein. Thank you both very, very much.